markets, see where everything's at the moment. And so let me go ahead and give you your current market wrap. I'll get my screen share up here in a minute, just getting it all running for you. And I'm also looking at a potential gold trade, so to sort of, putting the pieces together. I don't know if we're going to get it on in time. But I'm looking on down at gold. Last time I checked there, we were moving in the right direction. And that direction was up. So let me see if it looks like it might. No, it looks like it's starting to move on back down. So too bad. We were going to look at a potential long. But with all the movement going on, we might just have to back on out of that. Let me get a little bit more detail on my chart. Like I said, computers decided to do a fun little, love those Windows updates, right? And did a reboot. Knew there was a pending update, but did not think about it happening here in the next few minutes. So, anyways, I'm looking over at an intraday chart at the moment, and going down to a 5-minute gold chart using my handy Thinkorswim app. We got to move down right now. We're at 1245.8 on gold. And if I log on over, I'm going to check out my Nadex platform. By the way, if you don't have a Nadex account, hop on over to TFNN.com. On the top right side of the page, what you're going to see there is a Nadex banner. I want you to click on that Nadex banner, and then at the top menu, you'll see Nadex.com. You'll see that there is a link right there for trading, and click on Demo Trading Account. From that, you'll click on, and I'm looking a couple things up while we're going. You'll just fill in your username, first name, last name, phone number, email address, all that fun stuff, and you can get your demo account set up, and you can trade along with us on some of these trades that we try to do right here on the show. So let's see. Like I said, we only got a few minutes left on the trade, and I'm trying to pull it up to see if we're going to be able to get in fast enough, but we might just miss the cutoff for gold, but that doesn't mean that we're out. We just got to look for some other trades, see if we can find one today. All right, so it's like Assistant's finally decided to come back online, and I'll have room there for you in just a second, and I'll show you what I was looking at, okay? And but let's pull it up and get it going. So I was like from one hosting issue to another. There we go. Okay, yep, I'm back, coming in and booting up. So I apologize for all the technical, that's live right there. That's when you got live radio. Doesn't matter who you are, doesn't matter how long you've been doing it. It happens, and you just got to, go with the flow and figure out how to make it happen. Okay, so let's see, Hotcom's up. I'm in Hotcom. Got to love the Tiger's Den, by the way. If you don't have access to it, you can log in the Tiger's Den. Not only do you get access to Tiger TV, but you also get access to talk to other traders and see some of the traders that we're placing, what's going on in there as well. So, okay, so that gives us one piece. Let's get another piece. Let's put TFNN back up there. Let's go on over. Let's show you how to get into that Nadex account. Okay, click that Nadex banner. Go to Trading Demo Trading Account. Get that set up. Once you got that set up, go to Open an Account for free. Get that set up, and you're all set. From there, you can log into your account. Let me log in real quick. And getting on in here. Okay, so I got a short hedge left on my trades, but had some nice oil moves going on this morning. Let me go ahead and I'll open that oil chart up for you. I can't believe it completely rebooted even my Ninja for me. That's nice. Right when it rebooted. So what I was looking at over here, I was actually on a gold chart. Where's that gold chart? There we go. And I was focused in on the diagnostic chart here. We had plenty of volume spikes going on today, but I wasn't pulling back on those volume spikes, which is okay. So if it did, it probably would have lost. The gold was just moving down, down, down. And I was looking for a potential pullback right there close to the end of the expiration here at 1:30. But we didn't quite get the setup in time to be able to put the pieces together. But we'll try to get some more trades going for you, okay? And here's where we were at. I was looking at this. It's starting to move up, and I was like, we might get a trade going into this final 30 minutes. But this whole bar literally just went up and came down to stay right in that one range. All right, when we get back, I'm up, I'm running, and we'll get this show on the road. Thank you so much for your patience, and let's see what we can make happen in the next half hour. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. So go through, we're just trying to see if we can potentially put together a trade setup Just had a nice P2 boomerang reversal there off oil, but that was a little bit earlier in the hour. And it's moving on down right now. Let me go ahead and add in my close-to-close ranges as well on the expected ranges here. And let's see, we'll update that. Go over here, change this to close-to-close. Now I can see what the expected close to the next close will be, like what range it'll stay within. And once we have that, we can get ideas on a variety of trades. See, it's already pulled up after going down a little bit, pulling on back up. We actually had moved the expected range, less a few ticks on the hour right here. Let's see what it does here the next few ticks to see if we get a potential setup. No volume spikes at the moment, but we are coming off a pretty nice downtrend off the oil inventory report. It really shot down there and stayed down pretty well down to the 91.60 range, and then kept on basically pulling on down, but it's finally pulled its way on back up to 92. And I don't think it's going to move that much lower. It's really just oscillating, as you can see, sort of created its own little support line right here at the, what level? -1 deviation level. So it was able to bust through it. However, let's see, we'll just move that up here, get it out of the way. Let me grab that. I think I can grab it, or I'll just shrink it. There we go. That worked too. Yeah, we've now moved the expected movement high to low on the hour. But I just wanted to point out we had this -1 deviation level, came down, busted through it, but didn't bust through it with volume. Notice how we have a massive amount of volume. We have more than expected on volume, in fact. All right, but it moves the expected move. I mean, almost within just a few ticks past the expected move. If I zoom in on that hour right there, we can see, it just barely came below it. But notice the price action, the volume didn't really pick up. We got like the initial oil inventory release. We got some more volume out of that. A lot of take profits is what's happening right there. And then everybody firing off their orders this late to the game. And notice how the volume itself, the trend is dropping. Okay, right there in the volume. I'm looking at 10-minute volume right here. But notice how the trend is dropping on the volume. We get a little bit of an uptick going in on volume, but it's like a down bar, up bar, down bar. So that really tells us nothing. Then we go on over here. We got down bar, up bar, down bar again. That volume tells us a whole lot of nothing. So basically, what it tells us is, if anything, chop. Expect it to stay within the range, probably within inside the close to closes for the next couple hours there. When you get that mixed volume message where volume's rising, but you don't see price action reflecting it. So we saw like no commitment to the upside when this reversal happened, because it went up and then closed down and volume declined. So looking at those patterns on just increasing and decreasing volume, especially the big focus that I use when I'm looking at things like magnet prices, volume pattern recognition, I'm looking at 10-minute bars. Just like Tommy O'Brien talks about in his book, The Art of Timing the Trade. 10-minute bars. He's taught that a lot. I've learned a lot of that just co-hosting the Bull Bear Binary Hour with him. It's very helpful if you can go in and add in the actual trend of the volume. Is something that I've learned to adapt and add on to the magnet pricing models. But right there, so right there, even notice we have declining volume, no real commitment to the downside. Market does make one last dip, but the trend is done, and that's evident by the declining volume. And then, like I said, I'm just trying to really make sure this is clear for you. Close down, close up, close down. Volume increases on the up, decreases on the down. And keeps decreasing back on the up. Just chop. So if you combine the two together, if you see the chop in the price action, you see the chop in the volume, that's a good indication of, guess what? Chop, right? So what can you do if you see that? It's like, well, that's great, Darrell. Okay, so now you showed me a good way to see the chops happening, within 15 minutes. So, right? You got 3 5-minute bars, looking at the 10-minute rolling averages there. So what does that mean to me? How can I use that? What can I do with it? Well, what it basically means to you is it means that you can now look at a neutral trade. You could look at a butterfly or potentially even an iron condor trade to do on the market. And that would literally be the best way to take advantage of it for that hour. It pops up a little bit, you get a little bit nervous, but guess what? Down close, up close, down close. Volume up and volume declines. Exact same pattern. Look what happens right after it. Chop. Okay? We go over here. We get increasing volume. We got down close, up close, down close. A little bit more volume on the down close, but again, it was the opposite direction. Guess what? We got chop. Okay, now we go into this last hour, this most recent hour. Let's see if anything changed. We got up close, up close, up close, up close with increasing volume. Okay? May or may not be a great trade to go long on, but I want you to see the difference in the pattern of the price action. Now we do see the volume dropping, and then we see the volume increasing again. Sort of a little bit right there, not massive, but a little bit up move on that. But we get, what do we have? We have, multiple up closes followed by multiple down closes, but the volume was confirming it. Okay? So if I was going in on that trade and I was looking at, maybe a, P1 trade where it's breaking out, and I looked at a classic boomerang, pullback on the market, I got exceeding volume. It goes the opposite direction. It breaks the low. And we just had a pattern of consistent up move followed by a consistent down move versus a chop pattern. That gives me a lot more confidence in taking that trade to the downside because a lot more often you'll see that. Whereas if you don't see the volume going at least with the initial trend, you often won't see a pull. When it does decide to pull back and go the other way, you often won't see that nice little trend on the way back down, even if it's not with increasing volume. Volume did decrease a little bit, but it increased back. But again, notice smooth trend and definite clear uptrend in volume. So you can go through, you can look for that and see, how often do you see that pattern. And, it's pretty sweet. You start putting it together, and you see the reversals start, forming and, putting all the pieces. Let's see if we can find some other examples. But where we see, basically four closes in the same direction with increasing volume, and then at least 2 closes in the opposite direction. And often that will be with decreasing volume. So you don't get 4. Okay, there's 4 closes. 1, 2, 3, 4, increasing volume. And we didn't get 2 closes in the opposite direction. Just went flat on us. Trying to get, 4 up. But we don't have increasing volume. But notice still on this one, even with 4 consistent up closes, we did get a follow-up with a down close. And that did have increasing volume the entire way. So a great P1 trade right there. Early P1 entry. Going back. Trying to see if I can bring something to you today that you can walk away and use tomorrow. Let's see here, or maybe even later today. Got an increasing up volume, didn't get 2 down closes, so just went into chop. So looking for those 4 closes in a row in the same direction, and I'm just looking at 5-minute bars, nothing special. Okay, just looking at volume. And now the expectations and stuff obviously bring everything into perspective. The expected, ranges bring things into perspective. But all right, so we got increasing volume to the downside, multiple closes right here. So here's a very similar setup. Okay, you got 4, you actually have 5 bars in a row. You get 2 up closes, even with decreasing volume. Okay, right there, and notice how you get a nice uptrend. So that's the setup I'm looking for. I'm not saying it happens constantly, but when it does happen, it's usually pretty nice. There you go. Here's another one. You got increasing volume. Okay, you got multiple closes in the same direction. 2 up closes in a row. And that one actually had increasing volume the entire time, and look how it flew up. So really, really cool, simple setup. And, I'm not, like I said, they're not everywhere, but, those are more dojis than anything. Let's see here. Trying to find as many examples as I can for you. We're not just doji in it. There we go. Yeah, only 1 up close, only 1 up close. See, went chop. Which again, how do you use that? You see all those down closes, then you see up close, down close, chop indication. So that sort of you start noticing just the simplicity of some of these patterns, and it can be pretty amazing. That looks like a down close. Let's see, what is that? Open, close. 1976, 1970, like 1 tick, basically a doji. But notice we did not have increasing volume with the 4 bars in a row. We got barely 2 down. I mean, it's basically 2 dojis in a row. But still, even if I didn't want to try to make an excuse for the dojis, we did not have increasing volume. We go over here, you got volume up. But again, we don't have 2 closes in a row till back here where the volume was declining by the time it happened. Here we go. We got some down closes happening right there. Even some dojis in that process, okay? But look what happens. We have up closes going on, increased volume, and then we get 2 clear up closes happening at the same time, and look what the market does. So it's pretty cool. Hopefully this will be something that will capture your interest a little bit, And, sort of a little bonus system for you there. And one that's really simple to trade. And I do like to see those up closes exceeding like the increasing volume exceeding volume, not just being, volume in and of itself as well. So you'll notice every time before the 5 bars is up, we were exceeding volume. Okay, on each one of those examples. And let's see here. So we got volume. We basically had like one up. Like we didn't increase volume until here. See, notice how only on the last bar did it exceed volume, which is good. But we weren't increasing in volume during that time. So it was like higher, lower, lower, higher. Now it did go up a little bit, but it wasn't that increasing volume, and it wasn't like growing into a point where it accumulated and built that momentum up there until it finally pops and flips and turns around. Let's see here. Nope, not there. Okay, so here, let's look at this one. So technically that one is increasing volume. We got Doji up, 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 down, down. That one doesn't work out for us. Not too bad, though. So far we've reviewed like 6 or 7 trades, had one trade not meet the criteria, like not work. And, I mean, you can just keep going back and looking at these over and over again. But it's one simple system, and there's a lot of ways to apply it. So, if you're applying it on Nadex, how could you apply this system? Well, you could go in, you could use the spreads. Spreads are one of my favorite things to trade on oil. I love trading spreads on oil. I'll throw 40-plus contracts on at a time. And you go in there because, I mean, oil just moves. It moves fast. It'll move 50 cents. It's no big deal. Well, what is 50 cents? 50 cents is $50. I go in there, I put a trade on, I'm risking 20 cents, $20. I put up 40 contracts, I'm risking $800. Thing moves 20 cents, I'm up $800. Thing moves 50 cents, I'm up, what is that? Like, a couple grand. So, moves $1, I mean, you're rolling, right? So, you go in there and, you trade it with some size, and you can make some pretty good money on it because it will move so, it's a massive mover. And the premium, maybe it'll be 5 ticks away, maybe 20 ticks away, maybe 10 ticks away. But, I'll even go in there with 15, sometimes 16, 17, 18, 20 cents. Sometimes, I don't want to really go more than 20, but I'll go in with sometimes 20 cents break-even distance on it, just because I'm like, the thing can move so far. And, okay, if it moves 20 cents, I'm break-even. Past that, I'm making some cash. And it's just a sweet way to trade oil, not having to worry about it. If you do 10 contracts, I'd say 20 cents of risk on a contract. That would be like $200 risk. That's like having a 20-cent stop loss if you did just 10 of them. It's like having a 20-cent stop loss on an oil future. $200, but you have no stop loss. It can go against you as much as it wants to. 20 cents, 40 cents, $1, $1.50, and it doesn't hurt. And that's what we talked about yesterday. We were going in, and we were talking about the spreads. And on the spreads, let me see here if I can pull this up for you. Yeah, there it is. I got that PowerPoint from yesterday I was going through. And let me get back to the normal view on this thing. I'll open up the slideshow. We walk through what is a Nadex spread and how to avoid this scenario using a Nadex spread. And I went through and I taught you yesterday, how do the spreads work? They're, buy or sell them. And they got much better leverage than futures, stock, Forex, options. I showed how they have, the same or better pricing as a simple Black-Scholes model, looking at the same S&P E-mini options versus the US 500 spreads on a Friday, when they both have the same expiration time and same strike there. And I talked about every single tick is worth $1. The spread is just the difference in the floor and the ceiling. And you basically can't make any additional money past the, ceiling if you're buying. You can't lose any additional money past the ceiling if you're selling. And you can't make any additional money below the floor if you're selling. Can't lose any additional money below the floor if you're buying. So all that looked really good. We got all that down. Talked about how they have new spreads coming out. They start at 8 a.m., so 8, 9, 10, 11, 12, 1, 2, 3. So it'll depend upon, what, or I guess 2 o'clock is the latest spread I think that's released. And as far as in the afternoon, and then they start back up at 6 on FX. They start at 3 or like at 10 or something on Nikkei, and then like at 3 a.m. on DAX and FTSE. and then at 8 a.m. on most of the commodities and the U.S. indices. And so we'll wrap that up, too, with the comparison that we were going into yesterday. What if we compare the spread versus the forex pair of the future? And how would the trade have worked out? All right, y'all stay there. I'll be right back after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
right, folks, we're going back here to the Diagnostic Trading Hour. So oil did move on down, as we talked about there about, 15, 20 minutes ago. Moved down. Actually, not only did it move to the expected move, it actually surpassed the expected move on the hour, the expected range. And but it went down to the low of the expected range. And looks like it's going to close just a few ticks off of the expected close to close on the hour. So notice when we had that pattern, we did not have so much the choppiness going on. We had the clear up. That you didn't know about. Okay, it would have been nice to take advantage of. There's a couple ways you might have taken advantage of that, but, probably you just would have sat back and not done anything. But when you got the exceeding volume and you had the increasing volume, notice the combination, exceeding and increasing volume, and the market is rising consistently with 4, ideally 5 bars in a row on the same direction of the close. And then that follows by 2 bars closing in the same direction. Enter when that next bar's low is broken. You go short, targeting usually the other side of the channel. Okay, so in this case it would be the low of the channel. It could be even going into the next hour, depending upon when that happens. Okay, and so it goes on down. You're targeting it. It hits it. You get out. You did it on a spread. I mean, you could choose a 2. You could choose a 230 if you wanted to. It just depends upon whatever the best spread is. One thing I definitely condone. I was looking at spreads this morning on the oil inventory report. And I noticed when I pulled it up, I was like, oh, that's not bad. Okay, and I got an 11 o'clock for, it was I want to say $5 or $6 risk. But then I looked down at 12 o'clock, $6 risk. And then at 2 o'clock, $6. I'm like, well, wow, okay, well, forget the 11 o'clock. And so you always, that's the big thing I love about the scanner is I was in such a rush to make my trade that if I was not looking at the scanner, I would have taken that 11 a.m. I would have taken the one that gave me more time. And it would have cost me money. So it's a very, very good thing that I did take the 12 o'clock and on the trade because I was fading. I was going long on the market, and if I would have taken the 11 o'clock, I would have basically not had the chance to let it bounce back up and recapture that. It wasn't a massively profitable trade at all, but I mean it would have ended down here versus like up over here. I got out and it could save your bacon. So, I mean, obviously, if you can get the same amount of risk, but have more time to be right, obviously, you always want more time. And I was just looking at the down move. It's down to the expected volume and volume decline. I'm like, hey, I think we might get a bump up. And, honestly, it's a little bit early on jumping in on that. But we had, okay, there's a 5. Well, the 5 didn't break. Well, what about the 10? And I was looking at that. Well, the 10, it, right there. And it did break up a little bit right at the end. See, right there it broke up. But it sort of fell on back down. Now, it worked fine for like a current at-the-money spike striker. I was going for a big spread, a long position I was hoping. And spike striker, I mean, the one thing about it is usually, it's a reversal to neutral. Okay? And we basically got neutral for the end of that hour. And then for the reversal, well, not so much. And spreads, obviously, you want a little bit of movement. You may only need 5, 10, 20 ticks, but you do want some movement because it's obvious. It's a variable payout between where you buy and where you sell is your profit. Okay, well, hopping back on topic to wrap up in these last couple minutes, just wanted to show you the comparison of the example from yesterday. And so looking at that comparison side by side, and what we got on it right here was, I'm going to do it. We got it. Okay, so we put them side by side. And the net result on the trade, if I can get it to show, you know what? I'm going to have to do it tomorrow. So we're not going to have time. But tomorrow we're going to go over comparing side by side the spread versus the future and how the two would turn out differently. Okay? Y'all have a great day, and I will catch you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.